Happy Monday, folks, and a very good morning to all of you. Sunil and me are back with yet another episode of FinMet Mondays. So, talking about the price action, Sunil, we saw a huge fluctuation. We were talking about gold recovering, and then we saw the complete opposite. That's also something that we flagged, and kudos to both of us that we saw that coming. That it's possible that might happen.
I think when we talked last week, um, you were spot on when you said that 1960 was a support, and if the support was broken, we'll go down and hit 1940, and that's exactly what happened. 1940 seems to have been held, and so in my view, I think 1940 is a very strong support, and I do believe that from here we should see gold consolidate up to 1960. I don't see further downside for the time being. I think we're at a level now where physical demand is healthy, and I think even the dollar strength that we've seen is probably at its height right now, and then dollar should stabilize downwards, and therefore gold should stabilize upwards.
Okay, I have a slightly different view. I think there might be a little bit more correction, so to speak. And the reason for that is that a lot of the fundamental parameters are still, going to weigh on gold price action. I think participants are definitely looking towards it. On the technical front, one of the things I want to flag is if you see this region here, this was the November 22 low that we had hit about 1600 levels, right? From where we've just jumped all the way up to 1900s, 2000s. If the ascending line that's drawn from this also is something that is seen as a key area of support for the metal. So if we just traverse along this line, we see that somewhere around these 1940 to 1930 levels, we might see slight of a correction, but this is more of a minor support level. This is what I was talking about last time as well. The more pertinent and relevant one for traders would be the 38.2% Fibonacci retracement. This is drawn again from that November 22 line, and we see that somewhere on the 1900 levels. Gold price action definitely, nonetheless, but there are multiple other things happening. I think in terms of demand, we've seen demand pick up as gold prices have corrected. Sunil, how have things been on the production side for gold specifically?
Yeah, I mean, so we always talk about demand, but I think on the production side, there's been some changes that have taken place. For many years now, producers had been reluctant to hedge. They felt that their shareholders were looking at upside, and therefore they just left their positions unhedged. What has changed, however, is a couple of things. One is that the forward premiums or the contangos that producers now get have substantially increased from being like $20 to $30 a year to now being close to about $100 a year. So this has created an incentive to do forward sales for producers and lock in a higher price. Plus, of course, the base price has gone up, right? We were trading at 1815, 1600, 1700. Now we're trading around 2000. So the combination of a higher spot price and the fact that the forward premium is high means that a producer can sell 3 years forward, for example, 4 years forward at 2300 or 2400, which is a very attractive price. And I think what we're seeing is, and what we're hearing about, is the fact that there has been some producers selling, especially in Australia, especially in Canada. And so I think this is the beginning of more forward sales to take place. And that's one of the reasons why I'm not very bullish on gold in the medium term, because I think it's going to cap the upside.
Interesting. On the domestic front, we did see TRQ allotment revisions also. What do you see the potential impact of these, revised allocations or revised notifications on the allotment for TRQ?
Yeah, there's a couple of things I would say. One is that obviously the quotas per applicant is now much lesser than it was before. So the imports are going to be dispersed across several companies. So that's going to mean more importers, quote unquote, and more spread and imports being more spread out and fragmented. But the other impact that's important is that the ICMR rules are still applicable. So still, I think jewelers are going to be careful about using their quotas to make sure that they are able to substantiate where the gold has gone and keep a record to make sure that they don't fall foul of the ICMR rules.
Interesting. Interesting. Thanks, Sunil. We'll stay tuned to the developments. But till then, see you and goodbye.
Thank you.